All right, where Oracle is in the spotlight to begin the week. Stock here up about 5%. That's after the cloud giant looks on track to lead a consortium of investors that will control TikTok's U.S. assets. The company also announced on Monday a shakeup in its C-suite, naming co-CEOs to replace its longtime chief executive, Safra Catz, who will now serve as the company's executive vice chair. For more on all things Oracle, we're bringing in Alex Zukin, managing director and head of software research at Wolfe Research. So Alex, let's start with the changes that we saw today from Oracle in the C-suite, what you make of them and how you see this as reflective of perhaps some of the news we heard from them earlier this month on what their order book says about really the future trajectory for the company's revenues.
Yeah, well, look, I'll say first, leadership changes are always a difficult scenario, and best to do the difficult thing when things are going excellent. I think that was kind of the place from which Oracle was thinking through this. That's what Safra said this morning on the call with analysts, and I completely understand and agree with her judgment. I think that Oracle is in the midst of a generational growth acceleration curve, underpinned by the rise of AI and their role and place in becoming one of the hyperscalers to service that demand curve. And so I think that as a result, elevating these two executives, Clay McGurk, who really is one of the architects and drivers behind the OCI story, the Gen 2 cloud, the Gen 2 infrastructure that they've been delivering. I think that makes a lot of sense. I would say we were a little surprised to see a co-CEO structure, but it makes sense. One of these executives is kind of more applications, vertical centric and sales focused. The other one is kind of more core deep infrastructure, OCI, kind of Gen 2 cloud focused. And look, I think given we're going into a big analyst day in October where the company is going to share more information and details about the quality and quantity of its backlog and the contracts that are powering and funding really this growth acceleration story, the timing makes sense.
As you began answering, I was like, you kind of jumped on the question I should have asked, which was how often do we see a stock go up 5% after the company comes out and announces an executive change, let alone one where there's a dual CEO structure. So just to double click on that piece of it, you talked a little bit to kind of your comfort with that two-part structure. But when they have that investor day, do you think they're going to be thinking about differently reporting areas of the business? Is this a company that could look to break itself into two different parts with this structure? How did you think through possible permutations of this new co-CEO structure they have?
Yeah, I would say it's very unusual. Co-CEO structures are rare in that they are mostly, they don't work as well as singular CEO structures. So I think that was one of the surprising dynamics. I think also this is a company that's effectively been led by really the same team for the last, call it 30 years, by and large. Yep. So these are very, unique events that happen very rarely in kind of separate from the dual CEO structure. At the analyst day, I expect us to kind of understand the dynamic by which they will lead. They clearly, the two execs are from slightly different parts of the organization. And so to the extent that there's a scarcity of dollars to invest, in funding the growth in infrastructure versus funding the growth in apps, it'll be interesting to see how they kind of tackle that distribution of resources. But at the same time, one of the elements of the Oracle story is this synergy and platform of being full stack. So having the infrastructure, having the apps, having the database, and being able to leverage kind of the promise of AI and inferencing against your enterprise data, similar to what a consumer does with ChatGPT, the ability for that action to drive cloud migrations and modernizations of a customer's application stack, of a customer's database stack, and ultimately creating a win-win-win situation, a win for customers in that they have modernized and put themselves to be ready for an AI-first world. A win for Oracle, obviously, as they can extract a lot more value and unit economics out of the business, and a win for investors where that funds profitable growth, not just growth for the business.
And then just quickly, I want to get you out of here on the TikTok news. We've seen now, it's been several years, Oracle's been discussed as a potential data partner for TikTok's US assets. How do you think about that, really, if at all, when you look at the model for Oracle, the story for Oracle, and one that, as we've discussed here, dramatically changed within the last month?
Look, I think it's clearly a positive for Oracle that they continue to be one of the de facto providers of infrastructure for, one of the most viral and overall consumed workloads, globally. I think that's a positive. I think that you really should think about it also. They not just do they have TikTok, and now they're also aligned with ChatGPT and Meta and XAI and NVIDIA, but they continue to emerge as a strategic provider of critical functionality for the most scaled workloads in the world. All of those things are really good for Oracle. They get to learn through powering those workloads what is necessary to deliver at scale, securely, across a very complex and evolving geopolitical landscape. So I think that those are all positives for investors, increasingly so in a, kind of this unique world we're all going into.
That's right, tech and geopolitics, certainly in a new era. We'll leave the conversation there. Alex Zukin with Wolfe Research. Appreciate the time.
Thank you for having me.
Here to talk more about all of this, Ivana Delevska, Spear Invest founder and CIO. Ivana, you have a small position in Oracle in your tech ETF, SPRX. It has been Oracle's year in a lot of ways, but this CATS transition was a bit of a surprise. What do you make of that?
Well, we weren't entirely surprised, Julie, because if you look at it, the company has been going through a lot of transitions over the past year plus. So it's not surprising that there would be management change associated with it. So between them trying to go after large cloud deals, this TikTok deal, I think there is a lot going on, and they're trying to set the company up for the next leg of growth. So the management team that will be able to do that may be different than what they've had in the past.
Gotcha.
So it makes a lot of sense.
Yeah, with that huge backlog that they have now to work through. And then I'm looking at some of the headlines and some of our reporter notes who are on the call now. There's a White House call detailing some of the details of the TikTok deal. And it sounds like, there is this consortium. There's reporting that Oracle is going to be really key in providing the security rails around this new TikTok. What does that mean, sort of in a material way for Oracle?
Well, I think it has two implications, right? So it's first a customer that they're going to be able to provide services to in a large way, but it also sets Oracle up as an example of a company that can do these types of things, almost like a lead case, right? So I think there is going to be more deals like this to come, not necessarily with Chinese companies, but even from the US companies, where people will feel comfortable having their data on the Oracle Cloud and using AI agents on top of that data in a secure way.
So you, as we mentioned, you have a relatively small position in Oracle in the ETF. What would, I don't know what kind of criteria you're using, but what would convince you that it needs to be a larger position?
So we are actually looking at their enterprise business and trying to see how they can scale this to service their enterprise customers with AI agents. I think there is a case to be made on top of the large CapEx numbers, which I think investors were excited about. We're looking more from the angle of, can this be an asset-light business model that can provide AI agent type services to enterprises that already have their data on the Oracle platform? So I think it could be a pretty interesting story. There is still a lot of proving to be done, right? Because they dropped the ball in the prior cloud cycle, and now it's really at a point where you have so much innovation that they can kind of reaccelerate and gain back their share. But that's basically what would make us more comfortable if we see some progress on that front.
Interesting. All right, so something to watch for them. I want to switch gears and talk about another big tech story that we're watching, and that is Micron, which is set to report after the close on Tuesday. Last week, it had a 12-session winning streak that just ended on Friday. That was a record for the stock. So obviously there's some enthusiasm going into these earnings. Do you think they'll be able to deliver?
So Julie, they will definitely be able to deliver. The question is going to be, will it be above expectations? And as you mentioned, the stock has run up quite a bit. They pre-announced in August, which set the stage for a big beat. that investors are expecting. So we're not involved right now for that reason. Expectations are a little bit ahead of where we think results will come in. But if you look at the broad data center landscape, everybody had blowout results this quarter. So I think any pullback would be an opportunity for investors to get involved.
Well, and it's interesting when we talk about the large cap tech landscape and how companies are monetizing AI. Even if it's not their main business. And Micron's an interesting case of that with its high bandwidth memory chips, because it is actually selling into specifically that AI market.
Absolutely. And I think what's even more interesting is that memory and networking is really where a lot of the performance improvement comes from. So this is why a lot of the networking plays are doing really well this year, and same as memory, where it's really a critical component in getting better performance out of the GPUs for the AI trade.
How do you think about semiconductors more broadly? Are we in a post-semi cycle world now because of AI? It used to be, for people who aren't familiar with semiconductors, I mean, it was a very cyclical business in terms of price and demand. Is that not something that semi investors have to worry about anymore in the same way?
So I think this is hardware will always be very cyclical just because of the way things get ordered and put into place. However, when you have such a strong tailwind and when you're so early in a secular bull market, right, what you see is these cycles really get softened out, right? So we saw with NVIDIA between the Hopper and the Blackwell architecture, there was a little bit of a pause, if you will, in terms of ramping one up versus ramping the other one down, right? But it wasn't big enough to even move the needle for their earnings, while usually you would see like down quarters. So we haven't really seen, even though we had a generation change, we didn't really see a pullback in terms of the numbers. So I think this will last. Because we're so early in the secular trend, I think will last for the next 2 to 3 cycles, and then you're going to start seeing a more pronounced cyclical trend.
And the top holding in your ETF is actually a company I'm not as familiar with, Astera Labs, which is a semiconductor-related company, I guess. That's a bigger holding for you guys than NVIDIA, for example. Why?
So we were really able to size up Astera Labs on the pullback going into the summer after all the people panicked from tariffs. So that's why it's such a large position for us. Right now, they're a critical provider on the networking side. So what we talked about with Micron and memory, they are a provider on the networking side, and they're really well positioned when they're gaining share from just being servicing customers like NVIDIA to multiple like Amazon and a lot of the cloud service providers directly. So they're growing their customer base and they're introducing new products, which is really making a step change difference for their earnings and revenue numbers.